Reforming the markets. Lessons from Nigeria. Tonight on the program, we host Chris Onyema. He's the CEO of Nigerian Stocks Exchange. He'll be explaining to us what measures he's putting in place to make that market vibrant. This is The Trading Bell. My name is O'Brien Kimani. And of course, we also look at how the market has performed in the last 1 week. And Timothy Masharia is a market trader at NIC Securities. He'll be explaining to us why the market is still rallying 4 days to the elections. But for now, let's join Chris Onyema. It's nice to meet you.
Thank you very much.
Pleasure. Welcome to the Trading Bell.
Thank you. Thanks.
Good. Oscar, thank you very much indeed for joining us here on the Trading Bell. For a market that has been around for 6 decades, you know, is this the worst time that you are facing, especially as a country, when you're battling with insurgency or Boko Haram insurgency, crude oil prices, you know, tanking, and of course a recession?
Well, thank you very much for having me on the show. In the recent 2 years, Nigeria has gone through some macroeconomic shocks, as you've articulated. It's the first time the economy has been in a recession in over 20 years.
Oh.
So yes, we're going through tough times, but there's been significant policy response to address some of these issues from the comprehensive strategy that was released by the government, which is the Economic Recovery and Growth Plan, which is a short to mid-term plan to get us out of recession and begin to really grow the economy, to the engagement with some of the entities in the Niger Delta, where the oil comes from, to address the question of sabotage and really increase output. And that has been very successful, actually. So we're now almost back to 2.2 million barrels a day.
Oh.
And the international oil market prices have also held up. So the total amount of money coming into government has gone up, especially from an FX perspective, which is helping in reducing some of the impact of the recession. So we believe that we will get out of recession this year. We also note that the government has done a very good job of containing the terrorist activities in the Northeast, and therefore has enabled us to have a better perception as to safety within the country for international business folks that are coming to participate in our market.
And of course, we know for sure that when you look at the three, or let's say the 4 markets in Africa, there is a Joburg, Nigerian Stock Exchange, Nairobi Securities Exchange, and Egypt. All of them, you know, have gone through a very rough patch. Have we seen the worst yet for the African markets?
Well, I never say never. We must prepare ourselves for the unexpected. But we think that for this cycle, for this down cycle in the business cycle, we believe that we're actually in a recovery mode. If you look at what has gone on in Egypt with the IMF coming in and the effective devals that they've taken, they seem to be coming up out of recession. If you look at Nigeria with our commodity price shocks, the numbers are no longer pointing in a downward direction with regards to GDP. They're pointing up. If you look at South Africa with the political shocks and the S&P downgrading the sovereign credit rating there, we think that that is a wake-up call, and they are also taking measures to make sure that they turn the ship to begin to move in the right direction. So if you used some of these countries as a proxy for the continent, bearing in mind that really the continent is very diverse, I believe that the continent is in a good place in the sense that we're beginning to really recover from the commodity price shocks that we've seen, and hopefully have seen the worst.
What lesson do you think we have learned as markets because of the cyclic challenges that we have gone through, especially in the last 4 years?
Critical to have buffers. We need to really diversify our product offerings. We need to diversify our revenue streams right from the national levels. So if you look at most of the countries that have been negatively impacted from the commodity price shocks of the last 18 months, it is countries that rely solely on one or two commodities for most of their FX revenues. Yeah. And so if we are able to diversify our earning potential at the national level and at the market level, that will be very helpful. Building buffers before you even have the downturn is very critical. So if you had larger buffers, then the impact of dislocations in the market are better contained. For us, we really, at a market level, we believe that we need to give investors tools to be able to rotate into, and products to be able to rotate into as market conditions change, as you go through the business cycle. As you know, with lower interest rates, equities tend to be attractive. With higher interest rates, fixed income tend to be attractive. Where you have macro shocks, then stable income-based type products like gold tend to be attractive. So giving people exposure into some of these asset classes, real estate, FX, will allow them to better weather storms when they come.
And you have been cleaning the market and trying to make it more efficient and more organized. How then do you survive by delisting 85 companies or 85 listed companies, say, in the last 15 years or so?
We believe that we provide a marketplace that is based on trust. We need issuers and investors to have confidence in the market. That means that the companies that are listed on the exchange must meet minimum standards with regards to corporate governance. And they must also meet minimum standards with regards to transparency, with regards to meeting our listing standards, our pre- and post-listing standards. And once they are not able to do that, and we've worked with them and given them an opportunity to cure whatever deficiencies they have, it is incumbent upon us to do the right thing by getting them out of the market. Because whenever a company is on the market, we've given that company a stamp that they've met all of the criteria and they are safe to be invested in. One other thing that we've done, so we don't just delist companies, we work with them over long periods of time. And during those periods of time where they're trying to cure one deficiency or another, we've introduced transparency tools. There's X-compliance, there's a tool that on the ticker tape we also put symbols below listing standards, for example, to it's like a caveat, say buyer beware. And we enforce financial reporting timelines and standards so that people really understand and know what they're buying before investing in those companies. And so while we don't like to delist companies, we're compelled to actually do that in order to maintain the integrity of the market.
And we know for sure that the Nigerian market, in the early 90s, 2000s, I mean, insider trading and information asymmetry malpractices was the order of the day. How have you managed to turn around the confidence of investors to a point whereby today domestic investors are the biggest investors on your market?
It starts with us, the exchange, adopting the highest standards, making sure we have the right people, the right processes, the right systems, adopting corporate governance practices and culture that engender confidence, and then projecting it out to our ecosystem, the broker-dealer community and the listed companies, and making sure that they meet the necessary standards and that they exhibit and they have it in their DNA on a going basis. We believe that having done all of that, the investment community see a marketplace that supports just and equitable principles of trading, and that is fair. And so they're able to invest knowing fully well that there's a watchdog out there looking out for the integrity of the market. Another thing I want to add is that we've done a lot of work in automating a number of the processes that we've created. So right now, we have what we call the X-issuer, that companies that are listed are able to submit their financials in a secure online portal. And once that comes in, it's disseminated across the entire globe. That is a way to address the information asymmetry that you talked about. On the insider trading side, we've introduced training programs to educate the companies about who is an insider, what constitutes insider trading, and the like. We've also rolled out our X-Smart platform, which is a top-range, next-generation surveillance system that really surveils the market on a real-time basis. And we're working very hard to make sure that if we find any infraction, including insider trading, that we prosecute it to its logical conclusion. The last thing we've also done is to introduce our X-Whistle platform, where people can give tips to the exchange as to what they're seeing. Because people that commit insider trading and front running and things like that, they're not ghosts, they're human beings, right? So they tend to leave clues and footprint.
And when you look at the Kenyan market, what lessons do you think we can learn from your NSC, bearing in mind that our local market is still heavily dominated by foreign players to the tune of around 70%?
Well, the first thing to say is that our market is also, until recently, was also very heavily dominated by foreign portfolio investors. And during the downturn, we saw a lot of these foreign portfolio investors leave at a faster pace than the domestic investors. And that is what has now normalized the level of activity to about 50-50. So what we believe is that every player, every participant in the marketplace should be welcomed. But we need to drive policies around pricing, product, engagement with the investors to encourage domestic investors to participate in the market. That is one. Two, what we found in our own market is that when you're looking at market activity, we're talking about buy-sell activity. Domestic investors tend to buy and hold. They don't tend to turn over their portfolio as often as the foreign investors. And so we've started educating our domestic investors about the importance of asset allocation, portfolio diversification, and portfolio rebalancing after periods of time, like 6 months or 1 year. So when they follow those disciplines, it necessitates them to buy and sell securities.
And because we have to come to the end, finally, as the president of the African Securities Exchange, where do you see the African markets going in the next 5 years? And how do you plan to deepen the participation of Africans on the market?
Well, in 5 years' time, I see an African marketplace that has some type of linkage between the major markets, that has improved liquidity, that is more sophisticated, and that with more awareness of the domestic investors as to the opportunities that the capital markets present for building the nation and for creating durable wealth for the individual nations on the continent.
Right. Oscar, thank you very much indeed for joining us on the Trading Bell.
Thank you very much. Thank you.
Oscar Onyema is the Chief Executive Officer, Nigerian Securities Exchange or Stock Exchange, joining us here on the Trading Bell. We are back shortly. Stay right here. Market that figures do not lie. Timothy Masharia is an equity trader at NIC Securities, joining us here. Thank you very much indeed, Masharia, for joining us. Sir. Few days to the election, the market is still rallying. At a time like this in 2013, the NSE 20 share index was about 3207. Today, as we speak, it is 3773. What has changed?
I think we are seeing it's different from the time of 2013. One of aspects is that we have had a bear run for the last 2 years, which started in 2015. Now in 2017, the share prices had gone to a new low. I can speak that I think we had got even to as low as 2,500. But in 2013, we were coming from a high season of the market. So one is that the reason why experiencing this is because the seasons that then it was a bull run, now it was a bear run. So what we can say is that we are experiencing a pre-election rally. And this shows a little bit of confidence. And I can say in 2013, we dipped a little bit because of we had come from 2007, and the transition was not the best we can say. But now we saw the transition in 2013 was smooth and nothing happened, and people are confident. I think this is a very good indication that Kenya is growing. Economically, we are okay. Politically, we are okay. And we are secure.
Very good. If you scan the horizon, do you expect the rally to continue on, let's say, from 9th?
That one I can say yes. The reason why I'm saying this is because this is pre-election. The index has gone up from the way it was since I think this is the highest this year. Yeah, no. And we are seeing it going up, and people expected a time like now, and I can tell you, investors expected there'll be a dip so that they can buy. Then after election, we always expect a bull because then we have transited. But again, just to put a caution, is that this also will depend on the current situation after elections. I think so far, investors are confident, but reality is another thing. There's expectation and there's reality. So if reality proves them wrong, then we might not see this going on. But if we are able to transit smoothly like we did in 2013, we might see new levels of the index.
And of course, again, we are also seeing something very interesting whereby we are seeing domestic investors, driving the market, while foreign investors, are taking a precautionary look at the market. Is this a new normal that we are getting into?
I bet, the locals know better. Foreigners out there might be shaky, but when you're here, you're in Kenya, and you'll feel the environment. You can see, unless for them they depend on news which might be a little biased or maybe talk the truth. I think it goes to the location. If you're here in the country, you can see the environment. You can see maybe you can feel the ground, unlike them. So for them, they are jittery. And again, just to say, we are comparing ourselves. Kenya is a frontier market, so a foreign investor there is putting us in the same radar with other frontier market that are less riskier. They don't have an election. They are stable. Countries like Egypt, Nigeria, they don't have anything like this. So for last year, we don't have an option. We're investing here. right? For them, they have options. Because if you see those funds, they have reallocation for frontier markets. You can invest in Kenya, South Africa, Nigeria. So I think for us in the ground, and I can say this pre-election rally has, from the data that we have, is that the bigger part of it since June, the last month, and I think May, has been driven basically by locals. The foreigners has been more of net sellers, locals have been net buyers.
Good.
Yeah.
And I basically also want to find out from you, I mean, for the first time in many months, we are seeing Kenokobil, you know, moving the most shares. We know they have converted from a limited company into a PLC. Who is driving these sales?
I think it's both the locals and the foreign. And just to quote is that Kenokobil, even in market share wise, they have done extremely well. And I think we had a little bit of a dry spell in terms of dividends. They have started giving dividends, and I think investors are confident with the company. They have grown in terms of market share. They are strong. We had, and I think for Kenokobil, we are coming from other stories, like I think for the last year, but one, they had a case with the refinery in Mombasa, and it was a big case. But now going forward, we are seeing them now becoming stable. We don't have issues. They are growing. There's investors' confidence in the company. So that is it.
And when we go to the top losers counter, you started with the Kenya Airways. We know for sure. Throughout the whole of last weekend, and a few days thereafter, they were in a crisis after a go-slow by some of the pilots. And could this be the reason why it has lost about 11.1%?
Kenya Airways, that can be one. But again, there's another issue. Kenya Airways currently is been in the news that they are converting the debt they have with the banks to shares. This means that the current shareholders will be diluted. Right? So from that point, the investor who is already in Kenya Airways might feel maybe the dilution might go below the current price. Because if we are converting a loan of more than 70 billion, so there will be dilution, obviously. And when the investors, when there are volatility, I think this is something that is big in the arrangement. I think the Kenya Airways has gone to court to compel the banks to take up the shares. The banks have, I think, we've not had any word from them. So it's something in the discussion. But when there's such a discussion, investors are jittery. Because if you are diluted, you can be diluted to an euro that you might not like.
And when you look at the top gainers, is there anything unusual or anything that is outstanding?
For the top gainers, I think for the Unga, IGATS, and Nairobi Business Ventures, Deacons, those ones, we call them, they are the low end. They are not even on top 20. They are not even on 20 share index. So for them, they are really driven by retail investors and maybe local institutions. Some of these shares you get, they don't even have foreign investors. So I think it's just a matter of confidence. As the index goes up, it picks. It's like a boat. It picks everyone with it.
All right. Macharia, thank you very much indeed for joining us.
Yes, thank you, sir.
Asante sana.
Appreciate it.
Good.
Thank you.
Well, Timothy Macharia is a market trader at NIC Securities, joining us here to put the figures into perspective. This is the Trading Bell. Stay right here.
My name is Peter Kinyanjui, and I could like to ask what is a green bond?
Thank you, Peter Kinyanjui, for your question on green bonds. Green bonds are bonds that are issued by the government or municipalities to facilitate or to finance environmental conserving projects. The good thing with green bonds is that they are tax exempt, unlike other bonds that have 15% withholding tax. Currently in Kenya we don't have them, but we have them in developed countries, especially in the US and the UK. Thank you.
Well, and on that note, we come to the end of Trading Bell program for today. Many thanks indeed for your company. We look forward for seeing you again next Thursday, same time right here on KBC Channel 1. Remember, elections are about 5 days from now, and our communication channels are open. Our SMS line is 22162. Always start with the word bees, and my Twitter handle is @O'Brien Kimani, @The Trading Bell, and our Facebook page is The Trading Bell TV Show. Our Instagram page is The Trading Bell. My name is O'Brien Kimani. I'll see you again next Thursday, same time right here on KBC Channel 1. But for now, we take you back to Broadcasting House. Bye for now.